Hello everyone, Zaheer Anwari here on behalf of the dynamictrader.com. Can I get a quick confirmation that you guys can hear me and see my screen okay? Administrator, are we good to go? Yeah, fantastic, okay. Right, thank you again guys for attending this week's analysis with FX Street. We're starting to see a little bit of life in the foreign exchange market, especially from a trend trading perspective. So, we really need to start getting on top of things in terms of entry point, currencies to be looking at, exit management, risk management. This is the time now we really need to start putting things together. From a trend trading perspective, for you guys that aren't familiar with my background, from a trend trading perspective, it really just involves trading when trends are in play. When markets are in consolidation, we stand aside. And for those who've been following me for several months now, will know that I've actually been standing aside for quite a long time, and that is because the markets have just been going sideways. However, now we are starting to see what are called breakouts. So, currencies or stocks or markets in general, they don't consolidate forever. After every consolidation, there is a breakout. So we simply need to wait for that breakout. When that breakout occurs, it's really down to the forces of the market, the guys that actually cause these trends, the big dogs, the institutions. Until they actually cause these trends, as private traders, we have to really hold our positions and go into what is called capital protection phase, if you like. As we're now seeing these breakouts, we can actually start acting and we can actually start allocating risk to whichever currencies are in play in terms of trends. Okay, so what we're going to do in today's webinar is actually look at which currencies are breaking out and which currencies that we actually need to keep an eye on for breakouts, for future breakouts. Okay, so what you can see in front of you is a typical chart setup of mine. So we've got the watch list in the top left corner. We've got the monthly chart in the top right corner, weekly chart bottom left, daily chart bottom right. Again, regular visitors will be very familiar with this. As a trend trader, I'm looking at the bigger picture. So I'm looking for large moves as opposed to small moves on intraday charts. And I'm only looking to take a few trades a year or a few trades in terms of trends and holding those positions for potentially weeks, even months, rather than taking multiple positions in a day. There's a lot of benefits to looking at the bigger picture as opposed to trading on the smaller picture. You take less trades, the profits tend to be larger, more consistent, less stress involved, less time in front of the screen. And also, a lot of people generally tend to have jobs, 9-to-5 jobs when they're trading. So having a style of trading that can be adapted around your lifestyle as opposed to having 2 9-to-5 jobs. If you are working a 9-to-5 job and then you're also day trading, it kind of ends up being like 2 9-to-5 jobs that are running in parallel with each other. And I think that can be quite difficult to manage. So by looking at the bigger picture, you're not really caught up with that intraday noise. You're only really interested in what's happening at the beginning of the day and at the end of the day. And so you can go about your day-to-day lifestyle and then really just catch up with the trading when you need to, which is at the close of the bar. Okay, the close of the daily bar. So as a trend trader, I'm looking for these big moves called trends. And for that reason, I need to have the right time frames, monthly, weekly, and the daily. The monthly is where I look for areas of support and resistance. And you can see the tool that I have on here that is highlighting these major areas of support and resistance. This is a proprietary tool that automatically updates itself when these levels are created. And I also have the pink line levels. Now, the pink lines represent the high, the low, and the close of the previous calendar year. So in this case, 2014. Now, these pink lines are actually very useful, not just for support and resistance, but excuse me, but as a lot of you guys should now be familiar with, it also tells us what kind of market conditions we could be currently trading in. So if price is trading below the low of last year, then we are predominantly, or what could be considered predominantly, a bear market. And you can see that price has weakened as it's been trading below the low, so a bear market. If price is trading above the high of last year, then that could be considered a bull market. If price is ever trading within these pink line levels, then we'd consider it a consolidation. Now, the weekly and the daily chart is where I look for trend, direction, and trend alignment. Okay, so I'm really looking for the weekly and the daily to be moving in the same direction. So the first thing we need to look at is the 200 moving average. So we've got the 200 moving average on the weekly, and we've got the 200 moving average on the daily. What the 200 moving average gives us is the direction of the major trend. It really gives us the bias. So if price is trading below the 200 moving average on both time frames, then we're in a bear market and we have a bearish bias. If price is trading above the 200 moving average, then it could be considered a bullish market or a bullish bias. If price is trading below the 200 moving averages, I'm only looking for shorting opportunities. If price is trading above the 200 moving average, I'm looking for long opportunities. I don't go against this bias. So I wouldn't go short in a bullish bias, and I wouldn't go long in a bearish bias. We really want to stick to high probability environments. Now, within the bias, you then have trends. And as you can see, I have a trend filter. If I go to the naked chart, you'll notice you've got your standard red and green candlesticks. However, I don't look at standard red and green candlesticks. I'm looking for trends, long-term trends. And I have a proprietary trend filter that will simply highlight the direction of a trend. So I've got two colors, red and green. If the candles are colored green, it's a bullish trend. If the candles are colored red, it's a bearish trend. So what I want to do is put the bias and the trend together. So I want price to be trading below the 200 moving average and the trend filter to be red. Or if we're trading above the 200 moving average, I want the trend filter to be green. And I want that same logic applied on the weekly and the daily time frame. So if we put all three time frames together, this is how I would use it. The monthly is where I look for areas of support and resistance. So this is where I can really look for how far price can move. Now, as a trend trader, I'm not looking for a handful of pips. I'm not looking for 10, 20, 30, 40 pips. I'm looking for thousands of pips. The distance between round numbers is 1,000 pips. So if you look at this particular currency, 1.1 to 1 is 1,000 pips. So what I'm looking for is price to move between round numbers, 0.7 to 0.6 to 0.5. I'm looking for price to move between round numbers, so I'm potentially looking to target thousands of pips. The weekly and the daily time frame will tell me whether I'm going up between those levels of support and resistance or down between those levels of support and resistance by looking at where price is in relation to the 200 moving averages, and then also looking at what color the trend filters are. Okay, I'm going to quickly go to the chat box. Okay, guys, can I get a quick yes that you guys have understood the breakdown of my chart there? I don't know if my... Let me just double check. I think I'm still trying to get a little bit used to this, the new format. Okay, I've got Adinda, Sinatra. Okay. Okay. Right, fantastic. Okay. So if we look at the Aussie dollar, US dollar, let's go ahead and put this logic together. We can see that price is trading below the low of last year, so we are in that bearish market. However, if we look at current price action, we can see that it's really struggling. We've got a bounce to the upside. And the reason why we've got a bounce to the upside is because of the round number 0.70 acting as a level of support. And you can see that this has happened in the past. We've had support here, we've had support here, support here. So you can see how round numbers act as levels of support and resistance. However, as the long-term trend is bearish, what we'd really favor is a correction to the downside, and we'd like to see price move towards 0.60 and 0.50. On the weekly time frame, price is trading below the weekly 200 moving average, giving price a bearish bias. Trend filter is red, suggesting the long-term trend is bearish. And if you look at the actual overall structure, remember this is the weekly chart. The trend has been bearish since last year, so September 2014. to over a year now, a year and 3 months. And you can see long-term trend has been bearish. And that is even when price has gone through these areas of consolidation, these sideways movements. So what we're seeing here, this sideways movement, is nothing different to what we've seen in the past, which is why the Aussie dollar, US dollar is not the easiest currency to trade, because price does tend to go sideways for long periods of time. What we're really looking for is a neat linear trend in a direction without these prolonged areas of consolidation. If we go to the daily time frame, price is trading below the daily 200 moving average, so also that bearish bias. So on the weekly and the daily, price is both bearish in terms of the bias. The trend filter is red, suggesting that we're in a bearish trend on the weekly time frame. However, if we look at the daily time frame, if I just open it up, we can see that price is going sideways. It's alternating between red and green. And that is what happens to the trend filter when price is stuck within an area of consolidation. If you look at this area here, trend filter, again, alternating between red and green before eventually breaking out in the direction of the trend. Now we're going through the same thing again. What we're really looking for is price to continue to the downside. We want it to clear the round number 0.70. We want it to clear these support levels here. And once it breaks and closes below the low of September, this will then suggest a continuation of the trend. Price continues to the upside, breaks through the daily 200 moving average. Trend filter, of course, will remain green. And this is when we'll be in a bullish bias and when we'll start looking for long opportunities. For now, this is not a very good looking chart. So as a trend trader, this is where I'll be looking to stand aside. Now, I know there'll be traders out there who are trading ranges. So they'll draw resistance up here, support here, and they'll go short of resistance, long of support. That is one way of trading. But if you look at the actual length of the movement before a bounce to the opposite direction, price isn't in a particular direction for a prolonged period of time. It moves and then it bounces. What does that mean? That means that profit generated tends to be quite small. And if you're trading with a small account, then what that leads to is over risking. So instead of sticking to a good risk management of 2% a trade, it starts creeping up 3, 4, 5, 10, 15. And this is where trading becomes quite stressful. Now, remember, when you're trading ranges, not only is the profit made reduced, but the chances of loss is actually increased. So if you are increasing your risk, then you're actually carrying a very high chance of possibly blowing an account. And that does happen on a regular basis, especially to private traders, given the funds that they start with. So you really want to have a slower and more methodical approach. Okay, so for me as a trend trader, this is an environment that we really want to be standing aside from. Now, if we compare that to the US dollar, Canadian dollar, start with the monthly time frame, and we can see that the long-term trend is bullish. The long-term trend has been bullish since 2011, where we found a level of support, a bounce to the upside. And so that is the overall direction that we want to be going in. Now, if you have a look, prices, if we look at a little bit more detail, we can see that price is trading above the 2009 pivot, trading above the round number 1.3, and it's trading above the high of 2014. So we can see that we're very much in a good bull market. Prices now, so far this month, we've had a good move to the upside in December. It's taken price through the pivot high of September, which is this high point right here. Price has gone through that pivot high of September. This is a good indication of a continuation of the bull trend. And so we now want to see price move towards those round numbers that we mentioned, 1.4, 1.5, 1.6. Of course, there's a support level here around 1.43, but ideally we'd like to see price move through all these levels and go towards 1.60. So that is a good 2,500 pips potentially that price could move towards, could cover. If we go to the weekly time frame, price is trading above the weekly 200 moving average, giving price that bullish bias. Trend filter has remained green. Now, we did have, if I open it up, we did have a little bit of red here going back to mid-2014, but you can see that price has remained in a long-term bullish trend going back to April of 2013, even before that, February 2013. So you can see that it's been in a bullish trend for, well, almost 3 years now. And that is the direction that we want to be going in. On the daily time frame, price is trading above the daily 200 moving average, and the trend filter is also green. So we have clear space for this trend to develop. We've got a bullish bias on the weekly, bullish bias on the daily. Trend filter is green on the weekly, trend filter is green on the daily. And we also have price trading above the September high. This is all a very good indication of a continuation of the trend. And that is the direction that we want to be going in. And you can see that we had the breakout bar on Monday, a good move to the upside. Tuesday, we had further strength. Now, what we need to understand is how is price going to continue. If you actually look at the structure of this particular move, so if you look at price from around 1.29, we can see that it moves, it pulls back, it's moved, it's gone through a little bit of a sideways consolidation, and now we've had a move to the upside. So it's quite linear. It's not the neatest of trends, but it is fairly linear. The pullbacks aren't deep, and we want this structure to continue. So we want clean moves to the upside and a clean pullback or a flag formation, and then we want to break out back to the upside, and that is how we want the trend to develop. Move, pullback, breakout, move, pullback, breakout. This is what is called a linear trend. So what are we now expecting? Well, ideally, we'd like to see price come back to retest this level. After every break, there's usually a retest. And then we'd like to see price break and close above this pivot high, and this will suggest a continuation of the trend. I already have multiple positions running. I have positions running since price broke above 1.3. So these positions I've held onto even during this consolidation, because I do use quite wide stops. And now I've had another position triggered, and I'm looking for this trend to continue. And as and when price breaks out, I will strategically compound. Okay, so the US dollar, Canadian dollar, if you're not in this should definitely be one on your watch list. Let me close this down. Okay. The next currency we'll look at is the euro dollar. Okay, start with the monthly time frame. We can see that the long-term trend was bearish, a very profitable period for trend traders. After every move, price goes through a consolidation, and that is because of the round number 1.10. We can see that price has been consolidating around that level for quite a long time. Now, we had good weakness in October and November, but we can see in December a bounce to the upside. So all of that work done in November has all been undone with a big move to the upside. And that is because price was faced with a pretty strong support zone. Either way, price is still trading within this consolidation, and until we get a breakout, we'll be standing aside. As the long-term trend is bearish, I would favor a breakout to the downside, so I'd like to see the low of March cleared. Price move towards the figure 1. Ideally like to see this level cleared, and then price move towards 0.9, 0.8, 0.7, 0.6. So these are the levels that I would like to see price move towards. On the weekly time frame, price is trading below the weekly 200 moving average, giving price a bearish bias. Trend filter has remained red from as far back as mid-2014, and even during this area of consolidation, it's remained red. On the daily time frame, price is also trading below the daily 200 moving average, so we do have that bearish bias on the weekly and daily time frame. However, we've had a bounce to the upside, and the trend filter has now changed from red to green. Looking at the bigger picture, we're very much in an area of consolidation. What I would like to see is the 200 moving average hold strong. So as you guys are probably aware, 200 moving average acts as an area of support and resistance. In this case, it's acting as a level of resistance. I'd like to see this level hold strong, a correction back to the downside, and I'd like to see this support level cleared, and this will then suggest a continuation of the trend. If you actually look at the structure of the trend that I had traded previously, you can see a very neat trend to the downside. So from 1.4 at this high point here, this is going back to May of last year, we had a price found resistance, broke through the daily 200 moving average. So this is when the bias changed from bullish to bearish. We had a retest of that level, a bounce back to the downside. And if you actually look at the structure of the trend, neat moves followed by clean pullbacks. Now, let's take a moment to actually really study this particular trend. where do a lot of traders go wrong? A lot of traders go wrong when price starts moving against the major trend. So if you actually look, the long-term trend is very much bearish. But if you look at the structure of the trend, price doesn't move in a straight line. We have these areas of correction or pullbacks or flags and breather areas where price just goes through this consolidation before a continuation. And it's during these periods where private traders really struggle because they're seeing their profits diminish. So you may be at a certain level. Let's say, for example, you entered at this breakout here. At this point down here, you are, let's say you're £1,000 in profit. However, when the pullbacks start coming in, at this point here, you're down to £800 in profit. But you have to understand price action. For the trend to move forward, it first has to go back. And if you don't allow price to move against you, you'll never have that next wave of the trend. And so the growth that you're looking for on your account won't be as consistent and as large as you're looking for. That in-out movement is not how you should be trading. You should be getting in and holding. And during these periods where price moves against you, you should simply be patient and confident in your analysis that the breakout is more likely to happen in the direction of the trend. Remember the saying, the trend is your friend, guys. The trend is your friend, and that is the direction that you want to be going in. Now, by having good software, i.e. e-signal and proprietary tools, you then have trend filters which eliminate all of this noise. So if we go to the naked chart, if we bring up the euro dollar, look at the naked chart on the daily time frame, you can see that it'll be a much more taxing ride psychologically based on the fact that you are seeing these green candlesticks during those breather periods. However, by looking at the chart with the trend filter, it's just remained red. And that removes any of the psychology involved. It removes the need to get worried and to get stressed. And in addition, remember your risk management. Risk management is always small. So any moves against you, if your stop losses are triggered, losses should always be minimal. However, at this point, you're now in good profit. You have a trailing stop loss, which then eventually gets triggered once the trend filter changes from red to green. So you can see that positions which could have been potentially entered around July of 2014 will have exited around May 2015. Look at the length of that trend. And a trend of this size will give you phenomenal growth. I'm not talking about 2%, 3%, 4% growth. I'm talking about large growth, 20%, 30%. And if you have 2, 3, 4 of these trends every year, some in foreign exchange, some in stock, some in commodities, you can see how people like Warren Buffett have generated vast sums of wealth over their lifetime. Warren Buffett is not an in and out trader. Warren Buffett, or investor in his case, Warren Buffett invests and he holds. The logic for trading should be exactly the same. Find good setups, find good trades, enter on a small risk, and watch those grow exponentially through compounding over months. Okay, I think I have a question that's come through, so just bear with me a second. Yes, it's a simple moving average, Fabian. So any sort of moving averages that I use, whether it's the 20, the 50, the 200, I always use simple moving averages. Guys, there's not much difference on the charts in terms of exponential and simple. There's not really much difference. So, you know, if I go into the back end of my software and if I click on moving average, there's your simple. If I change that to exponential, it doesn't make much difference in terms of the bigger picture. So there's your exponential now. I can move it back to the simple. There's hardly any difference to where it is on the chart. So I just like to keep things simple by using the simple 200 moving average. I hope that's answered your question, Fabian. Okay, so in terms of the euro dollar, again, nothing to do. Range traders, day traders, yes, I get it. You're on a lower time frame and you're taking a handful of pips. Day trading is far more stressful. It's far more time consuming. It's inconsistent. I know there's people out there who probably disagree with me, but remember, trading is not about generating money to cover a salary. So if you're earning $2,000, $3,000 a month and you're replicating that through day trading, by sitting in front of your screen all day and you're getting that same kind of salary, fine. If you're happy with that lifestyle, then you keep doing what you're doing. But if you want wealth, if you want if you want to completely get out of the rat race, if you want compounded growth, then day trading won't give you that. You need to look at the bigger picture. Okay, let's move on to the next currency that we'll look at, the euro pound. Okay, euro pound, start with the monthly time frame. Long-term trend, if we go back to 2013, found resistance. We had an engulfing candle, or even possibly a tram tracks formation, and we had weakness to the downside. Price moved towards this resistance level. We had a bounce to the upside and then a continuation. So once again, showing how support and resistance levels get broken. So in this case, support, move to the downside. Price is now struggling again, and that is because of the round number 0.70, again acting as support. And we can see that price has been stuck within this range for several months now. So not a very good currency to be looking at the moment. Weekly time frame, trading below the weekly 200 moving average. So we have the bearish bias. Trend filter is green, suggesting long term the trend is bearish. However, daily time frame, trading above the daily 200 moving average. So we now have a bullish bias. Trend filter is green, suggesting a bullish trend. So if you're looking at the weekly and the daily time frame, totally out of alignment. Weekly is telling you long term is bearish. Daily is telling us currently that we are in a bullish bias and a bullish trend. So we don't have alignment. So that is one of the reasons why I'm showing you this currency. If you compare it to the Canadian dollar, where we had alignment across the weekly and the daily in terms of bias and trend, the euro pound in comparison is totally out of sync. And so from a trend trading perspective, this is not a very good looking chart. Okay, let's move on. The next currency we'll look at is the pound dollar, the cable. Okay, so if we look at the monthly charts, we can see that long-term price is stuck within this area of consolidation. It's been stuck in this area of consolidation going back to 2009. And that is because we had this big drop in 2008, where price covered a lot of ground in a very short amount of time. So usually after such a big drop in a short period of time, price will consolidate. And it's consolidating between 1.7 approximately acting as resistance and 1.5 acting as a level of support. So it's got a range of around 2,000 pips. You can see that there was a big drop to the downside, and this is a trend that I did trade last year for a good profit. Not the kind of profit that the euro dollar created, because the euro dollar trend was was a far larger trend and a far longer trend. But the pound dollar did hand out some good profit. Since then, it's been stuck in consolidation. And that is with these pink line levels acting as resistance predominantly. I know we had a breakout to the upside, 1.6 acting as resistance. Price is now back below the low of 2014, acting as resistance, and 1.5. This whole area really acting as a support zone. So for that reason, I'm not interested in trading the pound dollar. What I really want is the low cleared and for price then to move towards 1.4, 1.3, 1.2. But it's not a very easy ride going forward. There are a lot of support levels that price needs to contend with. Weekly time frame, trading below the weekly 200 moving average, giving price a bearish bias. Trend filter is red, suggesting bearish trend. Daily time frame, trading below the daily 200 moving average, also giving price a bearish bias.
Zaheer, sorry for interrupt. Can you please share your chart?
Sorry, say that again.
Please share your chart. We cannot see it.
Please share my chart. Okay.
Yes.
Okay, I haven't done anything different. Okay, bear with me 1 second. Is that better?
Yes, thank you.
Okay, so apologies for that. I don't know why my screen went black. Okay, but we're back now. Okay, so I don't know where exactly I lost you guys, but I'll start on the weekly. We can see that price is trading below the weekly 200 moving average, giving price a bearish bias. Trend filter is red, suggesting a bearish trend. Daily time frame trading below the daily 200 moving average, also giving price a bearish bias. Trend filter is red. However, let's look at the daily chart. It's messy. This is the trend that I was talking about earlier. So this is the trend where we had good profit. And then I got stopped out on this correction here where the trend filter changed from red to green. If you look at the length of this trend, when price broke below the daily 200, that was August of 2014. Excuse me, August of 2014, all the way down to February 2015. So a pretty significant trend. Since then, price has just been going sideways. And this is not really a trade a currency that has appealed to me as a trend trader. So until price starts either breaking through resistance levels and creating highs, or breaking through support levels, particularly this low of April, until it actually starts clearing these levels, as a trend trader, I'll be standing aside. Okay, let's move on. The next currency that we'll look at is the dollar yen. I'm pretty much focusing on the dollar currencies in this webinar. If we look at the monthly time frame on the Japanese yen, long-term trend is very much bullish. If I open up the currency, you can see that price is stuck within an area of support and resistance. So we've got this resistance, which is going back to 2007, and we've got the pink lines acting as support. So what we really need to see is price break out of this consolidation. As the long-term trend is bullish, we would favor a breakout to the upside, and we'd particularly like to see the high of the high of June. We'd like to see the high of June cleared, and for then price to move towards the round numbers of 130, 140, 150, 160. Those are the levels we'd then like to see price move towards. Weekly time frame, price is trading above the weekly 200 moving average, giving price a bullish bias. Trend filter is green. Daily time frame, trading above the daily 200 moving average, also giving price a bullish bias. Trend filter is green, but guys, look at the picture. Look at the bigger picture. It's very messy. If I take back price action, we had a very good bull run here. And this is going back to 2013, where the Japanese yen currencies, all the yen currencies handed out very, very good profit. We had this bull run. After every move, price goes to consolidation. We had another bull run to the upside after price found support at the 200 moving average. Now going through another area of consolidation. You can see this consolidation dates back to December 2014. It's just been going sideways throughout this whole year. So not a currency that I'm particularly interested in. What people need to remember is we're traders. Now I know whenever I'm on social media and I'm quite active on social media, and I'm very familiar with a lot of the other coaches, a lot of the other trainers, a lot of the advice that is dashed around, and I always hear a lot of people saying things like the dollar yen is my favorite currency, or gold is my favorite commodity, or sometimes considered a currency. Oil. What people need to remember is that we need to get away from favorites. There's no such thing as having a favorite. A currency is only your favorite, or an instrument or a commodity or a stock is only your favorite for as long as it's paying you. You cannot have an attachment to a currency or a commodity that is not paying you. The dollar yen is not a currency that would pay you very well, or would have paid you very well throughout this year. And it's certainly not a currency that would pay you very well given how it's currently set up. Now, what you may consider a good payment is probably not the same as what most other people would consider good money. If I'm in and out of a trade within a few hours or few minutes, that for me is not a good trade. I want to be able to stay in trades for months. So, I'm looking for growth. I don't really focus on money. I'm looking on growth. I look at it in a different way. The dollar yen is not going to give me the kind of growth that I want, especially when you compare that to the trend that we had on the euro dollar. Okay, let's move on. Look at the New Zealand dollar US dollar. So this would do something very similar to what the Aussie dollar US dollar is because they're correlated due to geographical location. We can see that the long-term trend is bearish, going through an area of correction, just like the Aussie dollar US dollar was. What we need to see is a breakout, a break and a close below this pivot support. We'd then like to see price move towards 0.6, 0.5, which is the low of 2009, and then 0.4, which is the low at around 2000, 2001. So that is the those are the levels we'd like to see the trend develop towards, or move towards rather. Weekly time frame, trading below the weekly 200 moving average. Trend filter is red. However, we can see that we had a move to the downside. Since then, just really been going sideways. And that is a feature of this particular currency. There's a trend, consolidation, trend, consolidation, trend, consolidation. So these consolidations aren't anything uncommon. We'd really like to see this sort of structure change. We want a structure which is similar to this structure here. A much neater linear trend where the areas of consolidation are short-lived. So going forward, once we have a breakout here, we'd like to see this cover ground in a much smoother way. Now, remember the logic. The longer the consolidation, the bigger the breakout. So the longer this consolidates, the more likelihood that we could see that structure develop once we get that breakout. On the daily time frame, if I open it up, trading below the daily 200 moving average. So we have the bearish bias on the weekly and daily time frame. Trend filter currently green. Looking at the bigger picture, it's alternating. Red, green, a little bit of red here, back to green. It's just sideways. Until it actually breaks through support, I'm not going to be looking for shorting opportunities. And once it clears, or if it clears the daily 200 moving average and starts creating new highs, that's when I'll start looking for long opportunities. For now, again, not a very good looking chart from a trend trading perspective. Okay, final currency we'll look at is the US dollar Swedish krona. Start with the monthly time frame. Long-term trend is bullish. Again, a very profitable period here. So two of the most profitable trends that I had towards the end of last year through to the first third of this year. One was the euro dollar, which we've already covered. The second one was the US dollar Swedish krona. And you can see that it did something very similar to the euro dollar. A big move to the upside. So I entered positions above the figure 7 and exited around just under, around 8.6, around this level here when price went into this consolidation. So a good bull run. Price has been stuck in this area of consolidation. You can see month of December, we've had movement to the downside. Ideally, I'd like to see movement to the upside and price then move through this resistance and move towards the figure 10, even the round number 11. So those are the levels ideally we'd like to see price move towards. Excuse me. On the weekly time frame, price is trading above the weekly 200 moving average. Trend filter is now currently red after being green for a pretty long period of time. So you can see that we are in this area of consolidation. So the fact that it has turned red is not something uncommon. We'd ideally like to see it reverse back to the upside, trend filter to be green and break out of consolidation. Daily time frame, price is now trading below the daily 200 moving average. Remember, this is the daily chart, and the only way this will, the only way we can really confirm this is for waiting for price to actually close. So we could at the end, we could potentially see a reversal back to the upside and price close above here. So we need to be a little bit patient and for price to close before we can determine what kind of bias we're in. Currently, we're in a bearish bias. Trend filter is also red. So in terms of bias, we're out of sync. Weekly, we have a bullish bias. Daily, we have a bearish bias. Trend filter is red on the weekly. Trend filter is red on the daily. Just a very messy looking chart. Not something as a trend trader I'm particularly interested in. Okay, so out of all of those charts, the only currency that's really setting up for consideration is the US dollar, Canadian dollar, the loonie. All other currencies are still trading within consolidation areas. They are looking interesting because we can see momentum appearing, but until they actually set up in a high probability environment, i.e. until they've broken out of these sort of consolidation areas, you don't want to get caught up in that intraday noise. You really want to be standing aside for now. Okay, guys, that is my analysis for today. Are there any questions? Okay, do you compound? Okay. Okay, do you compound at round numbers? No, I don't compound at round numbers. I compound on either breakouts or pullbacks. So depending on the structure of the trend, if it's a fast moving trend, I will compound on breakouts. If it's a slower moving trend, then I would either compound on pullbacks or breakouts. You really want to be focusing more on breakouts. I know the logic really is to focus on pullbacks because traders feel like they're getting into a trade earlier. But to trade pullbacks, you really need to have a better understanding of price action. So I wouldn't get caught up focusing on pullback. I would focus on breakouts because breakouts confirm the trend. When you break out of a high point, or if you break through a low point, that's a confirmation of a continuation. So it gives you a far better opportunity to really be compounding and then also generating further profit. So I would focus more on breakout as opposed to pullbacks. Okay, are there any final questions? Malcolm, yeah, that's a good question. The trend filter, the logic to the trend filter is proprietary. If you want to know more about the software, please email me on zaheer@tdtpro.com. Okay, I've just put that in the chat box, Malcolm. So if you email me over, I can give you a little bit more information on that. But the short answer is that it is proprietary. There's actually a very simple logic to it, but it's not something that I particularly share on these live webinars. So please get in contact with me regarding that. Okay, any final questions, guys? We've got 2-3 more minutes before I call time on the webinar. I'm just going to grab some water while you guys type them in the box. Okay, it's all very quiet. I can't see any questions coming through. Quite a few people on here. So if that is the case, I am... you're welcome, Malcolm. Okay. What I am going to do is just direct you to a few web pages. So just bear with me 1 second. Okay, so if I share my screen. Okay, where are we going? All right, here we go. Okay, share that screen. Sorry, guys, I'm still trying to. Can you guys see my? Can you guys see that? Yeah. So please follow me on Instagram. If you're not already on Instagram, I would definitely get onto Instagram. It's really good for networking and finding out a lot of other sort of information out there in terms of trading. I'm on Instagram. It's fx.mentor. If you want to know more about the community, the software, Malcolm, I know you've asked some of the questions. You can always go to our website, which is thedynamictrader.com. And finally, if you want blogs on currencies, if you want blogs on stocks and commodities, please go to thedynamictraders.com. So that's with an S. The first one I showed you is thedynamictrader.com. This one is thedynamictraders.com. It's got an S. And there's a lot of useful blogs up there. These are all free to access. The blogs are written by several of the members of our community. A lot of useful blogs on there. So if you guys remember, as traders, don't just focus on FX. As traders, be aware of the other markets. FX is not always liquid. When FX is quiet, when it's going through consolidation, another trend another market will be in trend, such as US stocks or commodities. So on this particular blog site, you will get a lot of information on FX and US stocks and commodities, and sometimes UK stocks as well. Okay, guys, I think I'm going to call time there. There's one question come through. What level are you looking to be broken to go long on the US dollar, Canadian dollar? Fabian, I'm already long on the US dollar, Canadian dollar. I think I have 4 or 5 positions already running on the US dollar, Canadian dollar. So my compounds are already in. So in terms of if you trade this, then the next breakout. So wait for price to break out, and that will be your next entry point. Okay, guys, I think that is it for today. Thank you all for attending today's webinar. I will see you next week. Have a great week, and yeah, smart trading, guys. Take care. See you soon. Bye-bye.